In precious metals bull markets, and we're in one, by the way, let's not equivocate about that anymore. When the momentum is established by gold, and that momentum attracts generalist investors to the precious metals market, when those people come down into the precious metals market, market leadership changes from gold to silver. And a short position in a market with the upside volatility that silver has relative to almost any other commodity on the face of the earth, I believe has the ability to deliver truly and turn around and bite them. I wouldn't have said that 3 or 4 years ago, but I do think it's going to turn around and bite them. The Wall Street guys do what's easy. And for 40 years, beginning in 1982, the US dollar was ascendant and precious metals were descendant. Silver being more volatile than gold, it was an easier thing to short. The second thing is that the silver market is extraordinarily leveraged. Many days, 100 or 200 times the amount of silver available for good delivery trades hands in the futures market. What that means is that it's remarkably easy to short for big people. These masters of the universe create short ladders going out 3 months, 6 months, 9 months, 12 months, 18 months. Borrow a fair amount of physical silver, sell that silver in the overnight market when the liquidity is the least, so that they can have the biggest impact on the silver market, and then look for the price signal from the physical market to impact the futures market. If somebody is short, let's say $1 billion worth of silver in the futures market, and somebody uses $50 or $75 million worth of silver, they lose, say, $10 million on selling into the physical market. In effect, you're investing $10 million in your loss in the physical trade to make $50 or $60 million in the long-term trade. This works until it doesn't. I have now been through 3 real bull markets in precious metals in my life. And I don't know why it's true, but what I do know that is true is that in precious metals bull markets, and we're in one, by the way, let's not equivocate about that anymore. When the momentum is established by gold, and that momentum attracts generalist investors to the precious metals market, when those people come down into the precious metals market, market leadership changes from gold to silver. Why? I don't know. Maybe because of the lower unit price. But what I do know is that you won't need Rick Rule to tell you when you're in a silver market. And a short position in a market with the upside volatility that silver has relative to almost any other commodity on the face of the earth, I believe has the ability to deliver truly a religious experience to the short side, irrespective of the structure of the market. These short guys do whatever's easy. I remember in the decade of the 70s, there was a lot of manipulation in precious metals markets to the upside, because that was the bias in the market. Wall Street learns thoroughly, but they learn slowly. They do now what made them money for 40 straight years, and they will do it until, like 2008, they learn.
Good evening, and welcome back to Silver News Daily, where market insights meet economic clarity. Tonight's feature report dives deep into a high-stakes alert that could reshape your financial outlook and redefine silver's place in the modern economy.
Show about 2 years ago, Donegan. I don't know if you remember that, but I was thinking about that, in fact, yesterday. I don't know how to answer the question for that listener, but let me tell you how I'm answering it for myself. I think that gold does well during periods of time when people are concerned about the maintenance of their purchasing power in fiat-denominated instruments. So I'm going to keep a substantial position in gold until a few things happen. 1, the federal budget is balanced. 2, we have a fiscal regime in place that will handle and service $100 trillion in unfunded entitlement liabilities. 3, until the interest rate on the U.S. Treasury exceeds what I consider to be the real rate of inflation, which I consider to be between 7.5% and 8.5%, and until aggregate federal debt is lower than GDP. Now, if you add those 4 factors together, it may be that I have to hold my physical gold until the 12th of never. But I don't have any artificial peg in place that says when gold goes to 3,500, I'm going to sell. Or if the gold price falls from 3,500 to 3,200, I'm going to sell. Remember that we measure gold in a floating abstraction called the US dollar. When other forms of savings appear to me more attractive than gold, believe me, I will sell gold and buy those. But measured clearly in a US dollar circumstance, as I say, I'm buying gold to shield my purchasing power from the declining purchasing power available to me in conventional savings products. And until they see those threats disappear, I'll continue to hold my gold. You say a digital monetary system, not the monetary system. Governments will never back their currencies with gold. They will not do it. It imposes a discipline on them. It reduces their power. And people go into politics for power. The beautiful thing about the age that we're living in, Dunnigan, is that with this proliferation of currencies, there doesn't need only to be official sector currencies. A currency can be whatever you and I decide it can be. It can be physical gold or, coming soon to a wallet near you, a gold token. We will see this in the near term. It is highly unlikely that this currency will enjoy any official backing whatsoever, and that doesn't particularly matter to me. I'm a consumer of currencies, and I love the fact that a whole bunch of people are out there trying to invent new ones which will serve me better. A physical gold token, backed by reputable organizations, 100% secured by gold and redeemable for gold, I think would be a superb currency. And I believe that it's technologically feasible now, and I think it will occur 2 or 3 years from now. Well, of course, I guess the strict definition of counterfeit has to do with the introduction of illegal money. By definition, then the US dollar isn't counterfeit because, according to the US government, it isn't illegal. Certainly, one could argue that a floating abstraction, which is to say a dollar, backed by nothing, with the exception of the might and the force of law of the United States government, is by its very nature counterfeit. But I will leave that to the questioner to answer his own rhetorical question. I use US dollars because they're a medium of exchange that's broadly accepted in the jurisdiction in which I live. I maintain a small amount of savings in US dollars because I know that I will need US dollar liquidity. But I save in other asset classes, including gold.
I'm your host, and what we're about to discuss is not theory. It's not a forecast built on hype. It's a confluence of market dynamics, macro signals, and historical patterns that suggest silver is about to enter one of the most explosive phases in its history. And according to legendary investor and resource market expert Rick Rule, this isn't just another rally, this could be silver's day of reckoning. Let's begin with a fundamental truth. Rick Rule states flatly, we are in a precious metals bull market, not entering, not approaching, in. And once that momentum is firmly established in gold, the historical baton always passes to silver. Why is this transition so critical? Because when generalist investors who are currently chasing gold's momentum begin rotating into silver, they don't just buy, they ignite it. The shift in capital creates a surge that's far more violent and dramatic than gold's own rise. Silver, long the shadowed sibling of gold, is crouched like a coiled spring. It's undervalued, it's underowned, and it's surrounded by short positions built over decades. And when it moves, it explodes. According to Rule, if gold breaks through $3,700, silver won't lag behind. It will catapult forward. Rule doesn't mince words. He calls what's coming for silver bears a religious experience, a financial reckoning so intense that even veteran traders could be blindsided. What makes silver so volatile and so potentially rewarding is the structure of its market. Silver futures often trade at 100 to 200 times the amount of physical silver actually available. This means the price you see on the screen is driven largely by paper contracts, not physical demand. These leveraged players, what Rule calls the masters of the universe, use a strategy that involves selling silver when liquidity is lowest, to push the price down, then profiting from manipulated signals in the futures market. This game works until it doesn't, and the signs suggest that the game is ending. Physical demand is surging. Industrial use is skyrocketing. Investors are loading up through ETFs, now holding over 717 million ounces, a 1.5% year-to-date increase. Meanwhile, the gold-to-silver ratio remains above 100, a signal that silver is profoundly out of sync with historical norms. Rules experience tells us that silver doesn't just recover in bull markets, it dominates them. In 2010, gold's breakout was followed by a 150% rise in silver in less than a year. In 1980, silver spiked from $11 to nearly $50 in just 2 months as gold surged. Today, he says, the setup is even more potent. We're now watching a critical resistance level, 33.12 That's the line. If silver breaks it, the dynamics change instantly. Sellers evaporate, short positions become traps, and the rally goes. From technical to transformational. But this story isn't just about investor flows. It's also about the global macroeconomic backdrop tilting heavily in silver's favor. Let's talk central banks. The European Central Bank is preparing for rate cuts. The Bank of England is under pressure. The Federal Reserve is hesitating, watching inflation cool but recession risk mount. Real yields are falling. The US dollar index is weakening. And when both fear and stimulus are in the air, few assets benefit more than silver. That's because silver wears two hats. It's a monetary metal and an industrial metal. During crisis, it stores value. During growth, it powers progress. And right now, the global economy is demanding both. Look at the numbers. The Silver Institute reports record-breaking industrial demand in 2024, hitting 680.5 million ounces, the fourth consecutive year of growth. Why? Because the world is electrifying, digitizing, and decarbonizing. Every solar panel, every electric vehicle, every advanced AI processor, they all rely on silver. There's no substitute for its conductivity and versatility. Solar is devouring silver at unprecedented rates. EVs are becoming rolling silver vaults. And as 5G, AI, and smart infrastructure expand, silver is becoming more essential by the day. But while demand skyrockets, supply is stagnant. The market posted a 148.9 million ounce deficit in 2024. That's not a blip. That's a structural gap. Mining projects are scarce, new discoveries are rare, and geopolitical risk is adding fresh strain. The trade war with China is heating up, with tariffs now threatening the flow of critical components tied to silver's industrial use, semiconductors, pharmaceuticals, and solar tech. So what happens when investors rush to secure silver while industries do the same, and there's not enough to go around? Prices spike. And this time, unlike past rallies sparked by sentiment or retail hype, the fundamentals are leading. But the pressure is mounting from another side, the short squeeze. Institutional players who've been short silver for years are now cornered. As ETF holdings grow, the available float shrinks. Physical delivery requests are rising. And once the margin calls begin, it's no longer a strategy, it's survival. Silver is up nearly 17% from its recent lows, and each rally is tighter, more aggressive, more convincing. Rick Rule warns that we're not approaching the breakout, we're brushing against it. At $33.12, the final psychological and technical wall will be tested. Above that level, shorts begin to fold, resistance thins, and the rally shifts from if to when. He says $50 is no longer fantasy, it's forecast. And beyond that, the ceiling is undefined. The spring is wound tight. The fundamentals are flashing green. The macro environment is silver's dream scenario, and the momentum is building toward what Rule calls a hyperdrive phase of the bull market. For those still doubting, still waiting, still short, this could be the last calm before a historic silver storm. And that's where we leave you tonight. Stay tuned, stay sharp, and stay ready. Because when silver breaks out, the move won't just be powerful, it will be transformational. This is Silver News Daily. I'm your host, reminding you, don't follow the crowd, follow the shine. Good night, and good investing.